Gold versus Bitcoin. This is certainly the great debate. Many are either in one camp or the other. They throw stones at the other, poking at flaws and trying to bring to light potential issues. Let's look at Bitcoin and gold today and address the factors such as the benefits, the negatives, the common aspects, which should you own, and how to buy them. You came here for the truth, so let me unveil that for you. This is certainly the great debate. Which one should I buy, gold or Bitcoin? I've got some money and I want to make the most from it. I want to know where I got to put my cash in order to benefit from what the central banks are doing. Well, I'm going to address everything today. Of course, there's going to be a lot more that I don't have a chance to get into, but certainly we will cover some of the main points. I'm going to get into it all, so let's begin. Before we get into the nitty gritty, we need to understand that every asset has pros and cons, advantages and disadvantages. You could say this about anything. So we have to highlight all of it. We have to be honest about it. We have to put it out there and suggest this is what's good about this particular asset. This is what's bad about it. And then you decide what you want to do. You don't simply say, I don't like that. I don't want to look at that, because that ignorance might leave us out of some potential property that is fantastic. And we might want that. You don't want necessarily all of your capital allocated to one certain thing, but there might be a reason to have one of these assets, not just Bitcoin, not just gold. And of course, you look around to stocks, and there's, of course, real estate and so many other things. Each one has the benefits. Today, we're going to talk about Bitcoin and gold. And when I talk about gold, I'm also loosely referring to silver as well. But for the purposes of this video, we're just going to say gold. Now, I need to highlight the fact that what we see here is a battle between both sides, but I want to just make it known what we should be looking at and why. First, we must address the fact that both gold and Bitcoin have particular benefits which some of them actually share. There is no one perfect asset. You can look around and there's always going to be something about a particular asset that makes it a little off-putting. It makes it difficult to use. It makes it difficult to keep and to trade and so on. Attempting to achieve the highest possible appreciation of an asset should not, I repeat, should not be the goal of investing. That's simply speculation. And this is probably the number one thing, the number one criticism about my channel is that I always bring this up and the average retail investor doesn't get this. Of course, they just want the maximum amount of appreciation. And this is usually based on ignorance, a lack of understanding, and of course the Dunning-Kruger effect in full force. Instead, we should always focus on protecting the downside risk while still allowing an allocation of capital to either preserve wealth, generate cash flow, and or have the asset appreciate. Having the asset appreciate is one aspect of many. Let's look at the benefits of gold. Gold has thousands of years of history as money. You can go way back and see all of these different empires that were using gold as their money. It's very clear that it's had a long history here. Central banks who are able to create currency out of thin air are still buying gold. You look around the world and most of the major countries have gold or accumulating gold, even though they could simply print up money. Why do they need to have gold there? Gold has all of the major properties of money. Everything that is considered to be money is, of course, with gold. You can, it's divisible, it's fungible, it's able to be a store of value, and so on. Gold can be passed down to future generations as cultures primarily in the East do to maintain wealth. You can have some bullion, you can have some jewelry, you take it and you give it to the next generation. You wouldn't do that with a stock because chances are in the next generation, that particular stock will be gone. It will be eradicated. It will be irrelevant. Now, of course, you would trade your stocks as they go out of business or before they go out of business, hopefully, and you can, of course, change your portfolio around. But the point I'm trying to make is very clear. Gold is used in industry from jewelry to technology. So it does have some use and not necessarily just a lump of metal put into a vault and that's it. Gold is internationally recognized and can be exchanged without the knowledge of a third party. And this is really important, of course, because you can't take some weird thing that nobody really understands and you can say, look, this thing right here, this has value. This came down as a family heirloom and I know that it has a lot of value. It's a painting that's 500 years old. This is valuable. But somebody might say, I can't do anything with that. So to me, it doesn't have value. It is always about the buyer. What is the buyer willing to pay? And when you have something that's internationally recognized, of course, there's always going to be that value there. Now, that might fluctuate somewhat, but certainly it's within a given range. Now let's talk about the benefits of Bitcoin. You can easily transfer money globally very quickly, much different than you would with Bitcoin, with gold, for example. You can take that with a couple clicks and you can have it move across the world. There is no scrutiny. Of course, somebody could be observing the transactions, but there's no scrutiny. There's no government saying you can't send money from this address to that address. And look at what happens in these countries that have these sanctions on top of it. They cannot move money out. There's capital controls. Capital controls are a very real thing today and back in history, and so people should be aware of that. Your money that's located in your bank right now, the banks could have a bank holiday. They could say, that's it. What about outside of trading hours? What can you do with your capital that is in stocks right now? Where would you be able to move that money out if they halt trading? These are things, of course, that people should be aware of, but they don't think about that because, that's a non-event, that's not possible and so on. But of course, you look at what had happened in Greece, look at Cyprus, look at what they've done to the financial system, the banking system, and we have to realize that having more control is really important. Low fees for purchase, sale, and transfer. This is important as well because those fees certainly adds up. Divisible down to a very small unit, 1 Satoshi being the smallest unit. And of course, if you want to transfer just a small amount, that is possible. And it's not controlled by a single entity. Some see this actually as a negative, but in my opinion, it's actually quite a positive. Let's take a look at some of the common factors between gold and Bitcoin. Both are deflationary in nature. There's only so much of each. For Bitcoin, you know already how much there is out there, how much that is in total, how much is being mined on a regular basis. The same goes for gold. Now we could have new discoveries. They could have a way to manufacture gold, to make it in a laboratory, and so on. But as of right now, with what we know right now, this is the case. There's only so much out there, and that's part of the reason why we have these supply and demand fundamentals in place. Both are now seen as a hedge against inflation. Typically, historically, you would always have gold being the hedge against inflation. But then Bitcoin came to the scene, and more recently, you've had a lot of individuals suggesting that they are getting into this specifically as a hedge against inflation. Now, when there is a major crisis, this is going to be a big test for Bitcoin, specifically because we haven't seen a real big bear market, a financial crisis, a drawdown that was prolonged like we had in all the previous instances, the financial crisis, and of course the dot-com boom and bust, and so on. So we'll see how that works. But of course, as of right now, this is sort of the general investing consensus for many out there anyway. Both can be held by the individual. So you can take physical possession of your gold, which is so key, so important. I'm not talking about gold ETFs. I'm not talking about gold stocks. I'm talking about actual gold. And the same thing with Bitcoin, where you, of course, can hold on to your private keys. It is not kept on an exchange, which we'll talk more about in a second. You get to maintain that control. Now let's talk about the negatives of gold. Gold is not as liquid as paper assets like stocks or US debt, for example. When you have trillions of dollars moving in and out in a short period of time, that's liquidity for you. And that, of course, allows you to move in and out as you wish. Now, there are times in which there aren't situations of lots of liquidity when there's a crisis, when everybody wants to sell suddenly. Of course, the liquidity dries up. But the point here I'm trying to suggest is that you have a bar of metal and it's in a vault at the bank. Is the bank open at the time that you want it? Are you able to necessarily take it? Maybe it's kept in Singapore. How do you get to that? And so on. That's certainly a factor. Now, for those holding gold for what I believe is the correct reason, and that is having it there to pass on to the next generation, you don't necessarily concern yourself with the price fluctuations. So, if you sold it the next day or the next week, it really wouldn't make a difference, and you shouldn't be selling it anyway, but that's my opinion. Gold was nationalized in the US, and so some people, they worry that it could potentially happen again. In my opinion, I don't see that happening again, but that's irrelevant. I'm just letting you know that this was the case. Institutional investors tend to shy away from gold because it doesn't provide cash flow and as in a dividend, and has no typical metrics and statistics like earnings reports to justify purchases. The average investor, the average fund manager, they're going to say, you're going to take that metal and you're just going to put it somewhere. What am I doing with this? They always like to say, oh, the earnings report of Apple came out, so I'm going to buy some shares. It was positive. And maybe we see the jobs report doing well, so that means therefore, these businesses are going to hire, we'll buy some of the big names, and so on. That's how they use the statistics instead of simply using it as a hedge against inflation. So the individual investor should be thinking about things different than, on the other side of that. I think that's really important. Let's talk about the negatives of Bitcoin. Bitcoin has only been around for just over a decade. It's new. We have not seen a crisis, a very big crisis during this period. So people should be aware of that. We're not really sure how it will behave. Concerns over quantum computing have been in the background. There's some that suggest maybe this could be what cracks the code, and so on. It lacks user friendliness. So for the average person, they don't know how to really get Bitcoin. They don't understand how to use it, and that connects in with its lack of oversight, which in my opinion is a positive factor, slows the adoption rate due to potential issues or misuse by certain people. So it doesn't have FDIC insurance. So somebody said, I don't want to put all my savings into it, because right now, if there's a problem with the bank, somebody takes my money, there's fraud and so on, I can simply walk into the bank, I can phone them up, I can go online. I have all of these different ways to access, a customer service representative and potentially rectify the issue. With Bitcoin, they don't have that. So for some people, they say, not going to touch it. Worries of regulation at the off-ramp could create additional headwinds. And what I mean about that is specifically, where it goes from the crypto world, the cryptoverse, into your actual bank account. So that's where they can get you. They can basically say, as many do right now, a lot of the credit cards say, we won't allow any purchases of cryptocurrencies. And then they could also say, we're not going to allow any purchases from banks of cryptocurrencies. Now, your money or however you want to look at that, within that crypto sphere is able to transact, and you could do whatever you want, but potentially they can hit you at the off ramps. They're certainly taxing people as a result of all of that as well. But I think that people should be aware of that. And it needs the internet to transact. Now, there, of course, are times when it's down and so on, but I think it's important to understand that if the internet is down, this is a very, very serious problem. Okay, if there's an EMP or something, I think we've got other things to worry about, which is why I always say you should not have all your assets in, all of that capital in one asset. That is extremely, extremely risky. Should we have both? There should never be one investment in a portfolio. That is always an unwise strategy. Price appreciation is one aspect of investing, an important one nonetheless. Using DCA, dollar cost averaging, or buying when prices are historically low can be used to convert fiat into these, the percentages of which is up to the investor, but understanding what you're trying to achieve is the most important factor here. And that brings me to my next point. You need to have a plan. If you do not determine what your goals are, you are unlikely to achieve them. It's a simple matter of fact. Create a plan, write it down, revisit it from time to time. I'm talking about pen and a paper. Write that stuff down. If your goal is to convert your fiat currency from your 9-to-5 job into an asset and then convert that into a house that you will buy, that looks very different than someone who is 65, retired, and needs a steady cash flow. That's why I see the ignorance out there for people that say, no, you're wrong, this is right. Well, it depends on the person. It is extremely, independent, and people think that the way that they are doing things is the, quote, right way. Being able to know what you want in advance allows you to actively make decisions at the appropriate time and implement the proper actions instead of reacting with emotion. That to me is really key, so important. Now we'll talk about how to buy Bitcoin. The most common way involves buying from an exchange. They will convert your fiat currency through your credit card or bank account and place it in a wallet which is controlled by them. And that's the key right there. You can buy it directly from another individual. You can purchase it from a Bitcoin ATM. These are popping up all over the place now. And you can mine the Bitcoin yourself. Okay, so let's talk about how to buy gold. You can purchase gold from your local bank. You can simply walk in, ask for it. They might need to have it delivered, but certainly that's one way that you can do so with relatively good fees, premiums associated with it. You can go to a gold dealer locally in your area. Make sure this is a reputable dealer. The same situation with purchasing from a dealer online. You want to be able to test that this is good stuff, that this is real. It's not tungsten. It's not something else. Okay, you want to be able to verify that. You can buy from another individual as well if you wanted to, if you trust that person. There are many different ways to verify if this is real. People use different tests. There's the acid test, and there's different meters that you can use and so on. But the point is, you cannot just simply say, well, it looked real or looks good or feels heavy. No, these are not good things, especially when you're putting a lot of money into it. And you could purchase jewelry instead. Non-bullion gold still has good value. So if you get a necklace, a bracelet, a ring, these might not have that same premium. They might not ever trade at that same level, at that price, but somebody could use it. They can enjoy it. They could wear that necklace. They could pass it down generation to generation. So they get to use it, but also at the same time, it has value. Think about a Rolex watch, for instance. Rolex watch, very expensive. But I'll tell you right now, you look at the price of the Rolex watch this year, look at it next year, look at it the year after, it is set to increase in price year after year after year. It is automatic that happens. And I'm just using that as an example, but it makes the point. So the question is, which should I buy? Assess what your goals are. Understand the risks involved. Look, can Bitcoin go to zero? Yeah, perhaps. Can gold go down significantly? Sure. But why sell a deflationary asset? Even an allocation of 1% or 5% could seem beneficial in the long term. People simply dismiss something instead of looking at it, breaking it down, trying to figure out everything about it, like we did today. I mean, we just scratched the surface. But if we knew all these things, if everybody knew all of these things, I think they would have a different viewpoint of it. By avoiding outside scrutiny and oversight, if at all possible. Okay, like I said, I can't get into too many details, but if you buy on an exchange for your Bitcoin, for instance, that means at tax time, of course, they're going to want to know what you did with it. They can track all those transactions, just like you buy gold. If you buy and sell at over $10,000 worth, at the particular dealers, they got to notify the government about it, and so on. So there are ways that people do things in a different way. I hope I'm making myself clear as mud, as they say. Maintain physical possession. If you give up your possession, you could very well be giving up your possession, if you understand what I'm saying, long term on that one. Keep focused on the policies of the central banks to determine what should be done with your portfolio. If they're going to destroy the currency, you need to be able to maintain that value. So what do you do? Well, of course, that's up to you. Well, that's all for this video here. We talked about gold versus Bitcoin. I wanted to address this specifically. I think it's really important for people to be aware of the benefits, of the negatives, of the different aspects. List what you believe is the best thing, or why gold has one advantage and Bitcoin has another advantage. Put that in the comments. Let's talk about it. Let's have an ongoing discussion. If you want anything specific here, maybe you want one about stocks, maybe you want one stocks versus Bitcoin, maybe you want to do where the best place to get Bitcoin is, lowest fees, and so on. Anything, let me know in the comments. Let's bring this up. Let's talk about it. I think it's important to look at all the different asset classes, looking into things a little deeper instead of just skimming over them, like many in the financial industry do. They say, gold, I don't want anything to do with that. It's a relic. Or this asset, no, that's it. We only invest in paper assets. I mean, we have to have the knowledge. We need that knowledge to stay ahead of the game. If you found the video informative, hit that thumbs up button. I really do appreciate it, and I'll see you in the next one.